People, welcome back to the channel. Welcome back to another video. If you're stopping by the channel for the first time, please consider subscribing to my channel. And while you're at it, smash that like button for me. I really would appreciate it. Also, hit that post notification bell so that you're notified every time I upload a new video. Be careful down in the comment section of the videos. A lot of spam, a lot of scammers. I will never ask you to contact me by WhatsApp or Telegram. I also do not invest money for my subscribers, so please be careful. Don't get yourself scammed. If you want up to 15 free stocks, Moomoo is going to give you up to 15 free stocks. When you open a new Moomoo brokerage account, they're going to give you up to 15 free stocks for just trying out their brokerage app. When you put $100 in your new Moomoo brokerage account, they're going to give you 5 free stocks. When you put $1,000 in your Moomoo brokerage account, they're going to give you 15 free stocks. Don't delay. You need to act today because it's a limited time offer. Go down to the description box. Click on that Moomoo link. Open up your Moomoo account today. Go get that free stock. Go get that free money. Now, I'm also going to send you guys 2 videos. Those 2 videos are extremely important in my opinion. The first video is a wealth transfer blueprint video where I'm discussing the 3 big boy blue chip paper assets that I'm going to be buying in 2024 and beyond to double my net worth in the next 10 years. Extremely important video because I'm outlining and telling you guys what I'm going to be buying over the next 10 years. Now, you don't have to buy what I buy, but at least you know what I'm buying just in case you want to copy my plan. You're more than welcome to create your own plan, but have a plan. Open that Moomoo brokerage account and get a plan together to build wealth over these next 10 years. Second video that I'm going to send you is a Moomoo tutorial video. I did about a 15-minute tutorial on the Moomoo app. Basic stuff. How to make your first trade. How to find customer service. How to find the help center. How to find the learning tutorials. In that video, I walk you through how to find all that stuff to make it a little bit easier for you. Keep in mind, I'm not the Moomoo expert. The Moomoo app is the expert because that's where all the information is when it comes to Moomoo and how to use the Moomoo app to buy your paper assets. But I thought I'd do that video to kind of collapse time frames and give you a quick pathway, financial pathway into freedom, right? We don't get freedom, guys, if we don't execute. We do not get freedom if we don't have a plan to execute. Those 2 videos will give you a plan you can copy to execute. You don't have to execute it, but it will give you a plan to execute. But it all boils down to clicking on that Moomoo link down in the description box and joining me as we use this Moomoo app to build our wealth over the next 10 years, right? Join me in order to do that. Like I said, link down in the description box for that Moomoo brokerage app offer. Also, my email address is down in the description box as well. You can certainly email me and let me know that you're ready to go and you're serious about building wealth and you want those 2 videos, and then I'll send them to you. Guys, we got a lot to unpack today. A lot of things going on, guys, with the US dollar. A lot of people are saying the US dollar is in trouble. We're going to talk about that in detail. We're going to also talk about if the US dollar fails, what does that mean for our stocks? What does that mean for our businesses? And what does that mean for real estate? We're going to talk about that because guess what? All of those assets are tied to the US dollar if you live here in the United States. if you have assets that are domiciled here in the United States, the US dollar is really, really important. So we're going to talk about that though. We're going to also talk about President Joe Biden. He wants to help fix the housing market. We're going to talk about some of the things he's trying to do or propose to help fix the housing market, right? So we're going to talk about President Biden too. Remember, it's an election year, so, these guys, they going to come out the woodwork with all the proposals. But we're going to talk about him too. We're going to also talk about stocks where some people think the stock market is overpriced and it's due for a huge, huge correction. We're going to talk about it. We're going to talk about that too, because you guys know 75% of my net worth is in the stock market. And I'm chuckling, but it's my net worth. That goes away. It's back to the workforce for me. It's back to old 9 to 5. If that 75% disappears, I'm headed to a 9 to 5. So we're going to talk about some of these folks that think the stock market is overpriced and due for some huge correction. We'll talk about it. And then, of course, we're going to talk about Bitcoin, a little bit of Bitcoin, crypto, give you your daily dose of crypto, where we're going to talk about some of these crypto whales. And who are these crypto whales? Especially over the last 6 to 12 months, the crypto whale makeup has kind of changed. It's kind of changed. You're going to be surprised who the new crypto whales are. But we're going to talk about that as well. Again, lock it in with a thumbs up, guys, if you don't mind, before we get into this content. Lock it in with a thumbs up if you appreciate the content, if you appreciate the daily grind, if you appreciate the financial nuggets and tips. Lock it in with a thumbs up, guys, before we get rolling. That would be greatly appreciated by me. Well, let's start with our first topic, which is the US dollar in trouble. We're going to start with that. And I want to read you something that I uncovered that I didn't know. It was pretty shocking to me. I didn't know. So I want to make you guys aware of it. Here's the headline. US dollar weakened 25% since 2020 amid global shift. 25% decline, weakening in the US dollar since 2020. Now, I don't know if that's 100% accurate, guys. That's probably the author of this particular article. They have some facts to support that, or at least on their end. But again, I'm not 100% sure the dollar is weakened by 25%, but let's keep reading. The United States has undoubtedly been facing geopolitical turmoil and its inflationary concerns. The rising interest rates have created an unsustainable model for the country. And amid BRICS, always comes back to BRICS, right? De-dollarization, the US dollar has weakened significantly over the last 4 years. According to true inflation data, the dollar has lost 25% of its purchasing power since the start of 2020. So basically what they're telling you is, if you had $100 4 years ago, 4 years ago, I had $100, right? 4 years later, that same $100 is worth $75. That's what they're telling you. The same $100 4 years ago now is worth $75. So guess what? That $100 that I was buying goods and services for in 2020, I got goods and services for that $100. Guess what? Can't get those same goods and services anymore in 2024 with that $100 because it's only worth $75. That's basically what he's saying, right? Same thing with our assets. He's basically saying if your assets were 100% In 2020, potentially those assets are worth 75% of what they were worth in 2020 and 2024. Now, this is according to true inflation data. That indicates that $1 US in the country $1 US in the country is worth just 75 cents worth of goods. That's exactly what I just told you. $100 in 2020 got you $100 worth of goods and services. Today, those same goods and services, you can't get them because your $100 is only worth $75. So you're 25% discounted. Same thing he's saying here, right? Same thing he's saying. For every dollar in 2020, now it's worth 75 cents. You can't get as many goods and services. Your assets are discounted. According to these guys, that discrepancy is a byproduct of the currency's inflationary state and speaks to its worsening condition as the international economy begins to increase its financial diversification. And all they're talking about is BRICS and SWIFT and some of these places who are coming out with their own currencies and their own payment system. Right? A lot of these folks do not want the US dollar to be the world's reserve currency anymore. So they're starting to band together. These groups of countries are starting to band together and create their own payment systems, their own currencies, and trying to convince other countries not to use the dollar anymore. So let's see how this unfolds. The last several years has been difficult for virtually all nations economically. Subsequently, one of the most influential economies on the planet, the United States, has desperately fought to find its footing. To start this year, the country is still fighting inflation, which has taken a toll on its currency. So inflation has taken a toll on our currency as well. Now, amid BRICS, de-dollarization, the US dollar has weakened remarkably at 25% in purchasing power since January 2020. This denotes a stark decrease in what goods can be acquired with the dollar in the country. However, inflation has only been part of the issue, as the rising debt and political positioning has also contributed to its failure. Remember, we talked about earlier in the week, we talked about this $34 trillion in debt that the US has. And about 7.6 trillion of that debt is being held by other countries like Japan, China, the UK, places like that, right? The more debt we accumulate, the weaker the dollar gets. Plus, now you got, BRICS nations trying to create their own currency, trying to create their own payment system and not use the dollar anymore to settle transactions around the world in anymore. So that's happening as well. So you got the pressure of inflation, right? You got also the pressure of our increasing debt, national debt. And then you also got the pressure from the BRICS nation and these other nations trying to band together to create their own payment systems and their own currency so that they don't have to use the dollar anymore. So you got like 3 attacks on the dollar right now, guys. Inflation, right? You have our debt, the US debt, and then you got these global forces like BRICS nation against us as well. So let's keep reading. The United States has faced a massive debt crisis that has threatened the status of the US dollar. The Congressional Budget Office, a US government agency, recently warned of an impending crisis from inaction regarding the debt concern. Its most recent long-term budget look noted that the economy faces significant fiscal risk of the ongoing pattern. Keep in mind, guys, when you look at the proposed budget for the United States government, the proposed budget for 2024, it's $7 trillion. Problem is, we don't collect $7 trillion in revenue. The United States government doesn't collect $7 trillion in revenue. And where does the revenue come from? Taxes. The big part of it comes from taxes that you and I pay, right? Problem is, our budget says we need 7 trillion. That's what we need to spend in 24. Problem is, we're not going to collect enough revenue, enough income. So that's another pressure on the US dollar, right? That's why the debt is a pressure on us, because we're operating at a deficit. We have to go out and borrow more money in order to meet the budget. If we're only collecting 4 trillion in revenue through taxes, but we're slated to spend 7 trillion, we got a $3 trillion gap or shortfall. We got to get that money from somewhere. And most of that money, we get it from borrowing from the American people and from other countries in the form of US Treasury bonds, US Treasury notes, and US Treasury bills. We raise a lot of money that way to cover that shortfall, right? And that's starting to creep up and bite us in the hiney. Let's keep reading. That reality has been observed by central banks throughout the globe. Now, you know we have a central bank, and it's called the Federal Reserve. But guess what? There's a European central bank. There's a central bank over in Asia. There are central banks around the world. We're just one of them. Now, don't get me wrong. We're the 900-pound gorilla. We're the biggest central bank. We got the biggest economy, right? So we carry a big stick. Our central bank, most of the central banks around the world follow what our central bank does, in most cases, right? So let's keep reading. The reality has been observed by central banks throughout the globe. These countries have opted to increase gold holdings to combat a potential US dollar collapse. So what's going on now is you got some of these other central banks. Guess what they're starting to go back to? The gold standard. They're starting to say, well, that's what we're gonna hedge. We're gonna hedge against this US dollar by going out and purchasing more gold. We're gonna hedge. This US dollar thing might collapse. We're gonna hedge our bet. So we're gonna go out and buy gold. We're gonna start stockpiling gold. So that's what they're doing. These countries have opted to increase gold holdings to combat a potential US dollar collapse. Subsequently, the United States has found no reprieve in the international prevalence of the greenback, which is slowly decreasing. This is what's going on around the world, guys. I'm not saying the dollar's going to collapse tomorrow. I'm just telling you the pressures on the US dollar. And why is that important for you and me? Because our assets are in US dollars. Wherever the US dollar goes, guys, that's where our assets go. Just saying. Again, my opinion, you don't have to believe me. Go out and do your own research. Come up with your own conclusion. I'm just telling you what my opinion is. Doesn't have to be your opinion, right? So just remember that as we go through this. This is just my opinion. You don't have to believe it. Believe whatever you want to believe. But I'm telling you what I'm seeing going on, and then we'll talk about some solutions here in a second. Geopolitical tension only adds to the concern over the dollar's direction. The inflation fight has been met with BRICS, de-dollarization initiatives, native currency developments. Basically, they're just trying to create their own currency, right? That's all that means. Digital asset prominence, Bitcoin, other cryptocurrencies. That's why I keep telling y'all, Bitcoin, these other cryptocurrencies, guys, listen to me. They are not a friend to the US dollar. Now, if you want to invest in them, you do whatever you want to do. It's your money. But they're not a friend to the US dollar. I keep telling y'all, the more crypto goes up, the more Bitcoin goes up, the more all of these cryptos go up, more vulnerable the US dollar is. See, the more people trade with these cryptocurrencies, the more people get used to these cryptocurrencies, the less reliance they'll have on the dollar. Just telling you, that's my opinion. You ain't got to believe it. You can believe whatever you want to believe, but I'm telling you what's happening. So put yourself a game plan together, right? Put yourself a game plan together. The native currency developments, digital assets prominence, and other factors have created a more wide-ranging economic system. See, I just told you that, right? All that fancy talk is the more they gain speed, the more crypto goes up. The more it goes up, the more these other countries can develop their own currencies, their own payment systems, the less reliance they have on the United States, the less the dollar becomes less important, is what I'm trying to tell you. Just keep that in mind. Therefore, the supreme status of the dollar is ultimately facing a concerning prognosis on the current trajectory. There you go. There's your little update of what is happening with the US dollar. What does that mean for you and me? What should we be doing? Well, in my opinion, guys, we still got to continue to support the US dollar. That's why I keep telling y'all, it's more important that we buy assets. It's more important that we double down on our companies in this great country. It's more important that we double down on real estate in this country. It's more important that we start businesses, right? Not only support the big boy businesses by becoming shareholders. That's what I mean by support the big businesses, the Fortune 500 businesses. We support them by becoming shareholders. Guys, the stronger our companies are, the stronger we are in our stock market, the stronger we are with our real estate, the better off we'll be. We do. We also got to reduce our national debt. That weakens the dollar. The more debt we have, the more weaker the dollar becomes, in my opinion. And I talked to you a couple days ago about what you and I can do. I can't control what some other person does. I can't control what the US government does. What I can control is my part. What I can control is my part. Keep myself out of high consumer credit card debt. Keep myself out of high interest rate car loan debt. Keep myself out of student loan debt. Keep myself out of any type of consumer debt. Keep myself out of any debt that does not produce income in my pocket, doesn't put income in my pocket. That's what I can do. I can keep myself earning, keep what I earn, and then invest what I keep in real assets here in the United States to support the dollar. That's what we can do. I can't worry about what the BRICS nation is doing. Them people gonna do whatever they're gonna do. And if they can wipe us out off the face of this planet, they will. Believe me, you. And I'm telling you guys, this cryptocurrency thing don't help. Now, again, I'm not telling you can't go buy it and do whatever you want to do with it. That's your problem. I ain't got nothing to do with that. I'm just telling you, for me, I'm not going to support it on that level, because I understand the more it develops, the more it becomes a more worldwide type of way to transact business, the worse it is for the US dollar. That's the way I look at it. You guys got to figure that out on your own and how you feel about it. But I'm not a big crypto guy. I'm not going to support anything that, in my opinion, devalues the dollar. I live in the United States, and the dollar is I mean, that's what we transact business with. That's the way it is. If we lose the dollar, if we lose that world's reserve currency status, that hurts us all, guys. That hurts all of our assets. I'm just telling you, if we lose that status where we no longer are the world's reserve currency, we lose a little something, something. We're going to take a hit, and normally it's going to be in your pocketbook. Because if that dollar keeps going down, I'm trying to tell you, these people saying 2020, take $100. Today, it's worth $75. You've lost 25% of your purchasing power. I'm telling you guys, that's a big chunk of purchasing power. And it's attributed to the things that I talked about. Inflation, right? our debt, our national debt, right? And it's also attributed to global pressures where countries are banding together, creating their own payment systems and their own currencies. When they say these native currencies, that just means they're creating their own little currency. But keep in mind, crypto plays a big part of that. It plays a big part of that. So be careful. I'm just telling you guys the way we support it, because I told you I'm about solutions here. You may not agree with my solution, but I'm about solutions, right? I'll give you what the problem is, but I'm always going to tell you what the solution is. The solution is you and I doubling down on the United States. That's the solution, in my opinion. Doubling down, saying, you know something? I live in the United States. I'm going to support the dollar because I understand the United States goes wherever the dollar goes. The United States will go wherever the dollar goes, period. So if you don't support the dollar, then I don't know what to tell you. Me personally, I'm going to support the dollar. I'm going to buy assets in the dollar, and I'm going to keep buying them. I'm going to keep buying them, right? And because I know there are other people out there that agree with me on this. Everybody won't agree, but there are a lot of Americans, a lot of people that live in this country who have come here looking for a slice of that American pie. Those people who have come here, the disenfranchised, have come here looking for freedom, right? They're looking for freedom. That's what we give people here in the United States. Now, we ain't perfect. We're not perfect, but we do offer freedom. We do offer anybody can come here from a financial standpoint, put their flag in the sand, they can put their flag in the sand and say, hey, I'm getting ready to build my wealth. And we'll allow them to do that. We don't care where you come from. We'll allow you to come here and be a part of this economic system. Where is she going to do that in the world, guys? Where are you going to do that at? Not many places. Not with the freedom and the liberties that we have. All of that's protected. Why? Because of the U.S. dollar. The U.S. dollar protects us. So if we lose that, we lose our protection. Just saying. All right, let's move on. Let's move on to old President Joe Biden. He's coming up with some things to save the housing market. So I want to go through that with you real quick because I think it's important. It's an election year, and I don't know which side of the aisle you fall on, but I'm just telling you what the current president is saying he's going to do to fix the housing market. So let's see what he's going to do and see what we think about it. Here's the headline. Biden says he can fix America's housing affordability crisis. Will it work? Let's dive in. Americans are in the throes of the worst housing affordability crisis in decades. Baby boomers aren't parting with their homes. Insurance costs are skyrocketing, and mortgage rates are sky high. And half of renters say they can't afford their monthly payment. Some have given up on ever owning a home. Now, y'all know that's part of the American dream, right? That's part of the American dream. That's from the beginning of this thing. Was get that house with that white picket fence with a little bit of patch of front yard in a good neighborhood, where your kids could go outside and play, where you could send them to decent schools, right? Where you could take a family to the park and have a little picnic. That's part of the American dream. Biden says he can help with that. He can help make that come to fruition for a lot of people. Let's read on. The problem has been years in the making, and economists agree it can't be easily solved. But President Joe Biden said during Thursday's State of the Union address that the government has a fix up its sleeve. Now, whenever he did his little State of the Union address, I didn't watch that. I think if you watch one, you watch them all. Y'all know how I feel about that whole thing. People say what they want to say. They get in office. They don't do none of that stuff. So I wasn't interested in the State of the Union. It doesn't mean I'm against Biden or for anybody else. Guys, I'm in my own little cocoon. I control what I can control. I build my wealth. I don't worry about none of the rest of this stuff most of these folks be talking about. But let's see what Joe Biden has to say about the housing market. This is what he said. I know the cost of housing is so important to you. He's talking about the American people. To the American people, I know the housing situation is important to you. If inflation keeps coming down, mortgage rates will come down as well. I agree with him 100% on that, right? If the Fed, and when the Fed starts reducing the short-term interest rate, the long-term interest rate will follow. There's a little bit of a lag, but it will follow. Short-term interest rates indirectly affect long-term interest rates. Short-term interest rates, aka the Fed funds rate, will affect, aka the 30-year fixed rate mortgage rate. And that's what President Biden is talking about when he says mortgage rates will come down as well. But I'm not waiting. Nope, I'm gonna go ahead and take some action right now. I ain't waiting on the Fed. I'm gonna go ahead and do it. I got the executive order here. Affordable housing advocates praised Biden's plan to help would-be homeowners afford to buy. But critics say Biden's plan could only exacerbate, big word, right? Exacerbate the problem. Basically make it worse. They're basically saying Biden gonna make this thing worse. His critics are saying, whatever your plan is, Joe, come on, man. You're just gonna make this thing work. You're gonna make it worse. You're gonna make it worse. So here we go. Here's some of the things that Biden is going to try to get passed. None of this is passed yet. This is a proposal, but this is what he's trying to get passed, right? Tax credits and other home buying initiatives. Biden proposed several actions to improve housing affordability and increase the number of homes to buy or rent. He announced a pair of tax credits, which would require congressional action before they go into effect. What did I just tell you? It's a proposal. Still got to go to Congress. Now you got to get Congress to fall in line. See, that's how our government works in most cases. There's not one body that just can approve everything, right? Congress might want something done, get to the president's desk, he might veto it. President might want to get something done, get it to Congress, they might veto it. But we need that form of government so we don't have some rogue out here doing whatever he or she wants to do and nobody can stop him. So we got to have that balance, right? So he's still got to get Congress to approve this. But here's what he's trying to get them to consider and approve. The first tax credit would be $10,000 refundable credit for middle-class home buyers, essentially an interest rate buy-down. The administration estimates this program would help more than 3.5 million buyers close a deal on their first home over the next 2 years. So basically, they're going to give them the first $10,000 refundable credit for middle-class home buyers, essentially an interest rate buy-down. For homeowners, now you just got one for buyers, $10,000 credit for buyers. Now here's what he's trying to do for homeowners. For homeowners, there's a $10,000 tax credit aimed at getting people to put their starter homes on the market. So if I'm a starter home guy, I bought my starter home. Okay, it's been a great home, but I'm ready to move on up like the Jeffersons. I'm ready to move on up. I'm moving on up to the sky, to a deluxe apartment in the sky. I'm moving on up, right? Biden is telling me, Richard, go on, move on up, man. put that starter house on the market and I'm gonna give you a $10,000 tax credit if you go ahead and put it on the market. That's what he's saying. So he got one for buyers, $10,000 tax credit for buyers, $10,000 tax credit for sellers. Those are the two tax credits right now. Here's what it is. For homeowners, there is a $10,000 tax credit aimed at getting people to put their starter homes on the market. This would be a 1-year tax credit to middle-class families who sell a home priced below the area's median home price to someone who will live in the home. It is estimated to serve about 3 million sellers. Now, y'all keep hearing a theme here, right? Middle class. He ain't say nothing about the 1%, right? Just middle class, basically the 99%ers. But you know how we work in this country. 1%ers will use this in some type of way to benefit too, right? You know that. But those are your two tax credits, one for buyers, one for sellers. Additionally, the president is calling on Congress to pass legislation that he says could result in the building and renovation of more than 2 million homes to close the housing supply gap and lower housing costs. That's a pretty ambitious goal, 2 million homes, either brand new or renovated. That's pretty ambitious. The proposals, Biden argues, would address the two primary factors behind the home affordability crisis. Decades of underbuilding means there aren't enough homes on the market, and mortgage rates have surged to multi-decade highs, more than double what they were before Biden took office. Rent is 30% higher today than it was before the pandemic. And home prices are now more than 40% higher since the pandemic. So rent is up 30%. Home prices are up 40%. All since the pandemic, 4 years. On top of that, you got sky-high interest rates. Meanwhile, homeowners who refinanced or bought into pandemic era ultra-low mortgage rates of 2% or 3% are very reluctant to sell their homes and buy a new one at the prevailing rate of close to 7%. More than 90% of current homeowners have mortgage rates below 6%. That's incredible, guys. I would be hard pressed to give up my 2-3% mortgage rate to go out and buy a house twice as much as the one I currently live in. Not only is it going to cost me twice as much, or they said basically 40% more. So if I bought a house for $400,000, what is that? 40% of that is what, $160,000? So now that $400,000 house is going to be in that $550 to $600 range. Plus I got to trade out my interest rate that I probably got a 2, 3, 3.5, 4% interest rate. I got to trade that out for now a 7.5. Plus I'm paying 40% more for a new house. People ain't interested in that, man. That's why you see the inventory levels here in America low because of that. Nobody interested in that. Like you just read, like I just read here, 90% of current homeowners have mortgage rates 6% or below. 90% of the mortgages, 6% or below. Who wants to trade their loan in for a 7.5%? Nobody, right? Nobody. Housing experts agree there are not enough homes available to rent or own compared to demand. Estimates of the gap range from 1.5 million to as many as 7.2 million, depending on who is calculating it and what assumptions are being made. So you have a housing shortage in this country. They're saying anywhere from 1.5 to 7.5 million homes were short. That's a lot of shortage, guys. That's why I keep telling y'all with this real estate thing, even when rates come down, demand is going to go through the roof. And if demand goes through the roof and we don't have enough supply, y'all already know the answer to that. What's going to happen to prices? They're going to go up. It's that old supply versus demand, guys. We have more demand, very little supply, prices go up. If we have a lot of supply, very little demand, prices come down. That's the way it works. Housing industry not in agreement with Biden, though. Housing advocates celebrated Joe Biden bringing the challenge of renters and homeless to the forefront. This is the most consequential State of the Union address on housing in more than 50 years, said David, whoever his name is, president and CEO of National Housing Conference, a nonprofit organization that supports affordable housing. President Biden's call for Congress to tackle the urgent matter of housing affordability through tax credits, down payment assistance initiatives, and other measures is warranted and represents a critical step in easing the burden of high rents and home prices. Others in the housing industry disagree. There you go. You know everybody wasn't going to agree with Biden, right? Y'all already knew that. Y'all already knew everybody wasn't going to agree with it. Now, of course, affordable housing advocates are going to agree with him because that's the business they're in. They're in the business of affordable housing. But you know people who ain't in the business of affordable housing, people who are in the business of selling houses for whatever the highest they can sell them for, they're in the profit business. They're not in the non-profit business. Most of these people, they're in the profit business. So you know the people in the profit business, they ain't gonna agree with Biden. Only people gonna agree with Biden are people in the non-profit business who support affordable housing. People that don't support affordable housing, don't care anything about affordable housing, all they care about is how much money can I make. In that camp, they don't agree with Biden. And these are the people I'm finna tell you what they disagree with. Others in the housing industry disagree, saying individual tax credits that promote more demand for housing and place limits on closing costs would further increase home prices and the cost of credit. Simply put, demand continues to outpace supply. I just told y'all that like 30 seconds ago, 45 seconds ago. Bam. Simply put, demand continues to outpace supply, and subsidizing more demand inflates home prices. Guys, that's the tug of war, right? Over here, you want to bring in more affordable, but if you bring in a big old supply of affordable, what does that do? It increases demand. It increases demand. And if your supply ain't ready for that demand, you are going to run up home prices. I think that's the truth. I'm all for affordable housing. I think everybody who wants a home and can afford to pay for it, right? I mean, you got to have an income. You can't just say, "Oh, I want a house, but I ain't got no job. I want a house. I got no income. I want a house. I got no way to repay you." No, you can't get a house. You can't get a house if you just a person that just raises your hand and just says, "Hey, I want a house, but I got no way to pay for it or help pay for it." No, you can't. That won't work, right? That won't work. But I think there is a need for affordable housing that's, and the key is affordable, right? Everybody can't live in some big old gigantic house on the water. We need communities where there are affordable homes in there, right? So I think there's a fine line there. Where that line is, I don't know, but I know we need affordable housing in this country. How much we need, how little we need, I don't know the answer to that, but I do know we need affordable housing. But we also need the ability for people like you and I to be able to buy assets that increase in value over time so we can create wealth. So there's a fine line there. We just got to find out where that line is. So others in the housing industry disagree, saying individual tax credits that promote more demand for housing and place limits on closing costs could further increase home prices and the cost of credit. Simply put, demand continues to outpace supply, and subsidizing more demand inflates house prices. And this is what the Ed DeMarco, president of the Housing Policy Council, a trade association of lenders, insurers, and data companies in the housing industry. There you go, man. So that's a little bit of Biden, what he's trying to get done on his side. You got your people that are for it. You got your people that are against it. Most people that are for it are people that are in the affordable housing nonprofit world. Those people are for it. And of course, Americans who say, I can't afford a $420,000 house, because that's the average cost for a house here in the United States right now. It's $420,000. In Florida, where I live, the average cost of a house is about $500,000. Now, of course, California and New York are different. They're crazy, right? But Florida is $500,000 for a house, man. And I already told y'all, at the prevailing interest rates right now, at the prevailing interest rate, 7.5% interest rate, 30-year fixed rate mortgage, you finance a house for $400,000 with a 7.5% interest rate, man, your payment, your principal and interest is like $3,000 a month. And then when you tack on insurance and taxes, your payment balloons to about $4,000 a month. That's $48,000 a year just for your housing. That don't include utilities. That's just principal and interest, taxes and insurance on a $400,000 mortgage. Average middle-class family in America, guess how much they make? $75K. So if you're a middle-class person in America making about $75K as a family, and you want that home ownership experience, you want to get your little piece of that American apple pie, you want your little piece of that dream, you want your little slice, you making $75K a year, it's gonna be tough to get a piece of that home ownership pie. Because you think about it, a $400,000 house, listen, man, that's about $50,000 a year in debt service. When you tack in insurance with your escrows, insurance and taxes, principal and interest, you're talking about almost $50,000 a year just for the house payment. You making 75, 50 of it is going to a house payment. How you going, what are you gonna do? You can't afford it. So that's what the president is saying. People just can't afford to buy a house. So let's find some communities where you can build houses for, $250, $275, right? Something in that area where people can actually afford it on 75, 80 grand a year. They can afford that and take care of food and clothes and transportation and insurance and, every other thing they need to take care of in a daily. People making 75, 80 grand a year, man, you can't afford it with the average price of a home in America being $420,000. It's just hard. So I get it, but will it happen? Will Congress agree with him? We'll see. But that's his proposal. Some tax credits, buyers, sellers, trying to make this thing a little bit more affordable. Bring on 2 million new or renovated homes. He's saying we need about 2 million of them. Where are you gonna get the money to do all of that? Because you gotta understand, guys, when this affordable housing game, it's hard to find dirt cheap property, like dirt to build on. It's hard to find dirt that you can build on. Not only do you have to find the dirt, then you gotta go in and put the infrastructure in the dirt. You gotta put all the utility in. Like electrical, you gotta put all the plumbing in. You gotta put all the streets in. You gotta put all the drainage in. You gotta have retention ponds. You gotta have Who's gonna pay for all that? It ain't just easy as, we're gonna bring 2 million houses. Boy, you gotta find some land, and then you gotta build infrastructure around that land, or in that land, and then you better have some businesses and things around those properties that can support them, right? So it's a long ways off, and again, whether you're for it or against it, it's an uphill battle. I'm for it, but it's an uphill battle. I'm for affordable housing. I think everybody who works and makes income or can pay. I'm not in favor of just building a bunch of houses and people just living in them for free and the taxpayers taking care of it. I ain't in favor of all of that. But what I am in favor for is someone says, hey, my income level is here. I need to be able to live too. Yes, I'm for that. You got a piece of income, we can subsidize it with another piece of income, put that together, boom, you in your place. I'm for that, 100%. So let's move on. We're going to talk a little bit about the stock market and why some folks think the stock market is overpriced. It's overpriced. Here's the headline. The bizarrely overvalued stock market is poised for a big correction, and the smart money is moving into cash. That's what a chief economist just said. Let's read on. Let's see. The stock market looks bizarrely overvalued, and indicators are pointing to a big correction on the way, according to Paul Dietrich, Chief Investment Strategist of B. Riley Wealth. Speaking to Yahoo Finance, Dietrich pointed to a handful of indicators in the market, which are all flashing a collective warning sign for stocks. So if you're into paper assets like your boy, I got 75% of my net worth in paper assets, right? If you're into paper assets, let's listen to this. Let's read it, and then we're going to talk about why we still should buy paper assets anyways. Basically, I'm going to let the cat out the bag. We're going to talk about why we still should buy paper assets, regardless of what this guy says. But let's read through to get a full understanding of his argument, and then I'm going to give you my response to this argument, right? Here we go. Red flags are arising in the price to earnings ratio of the S&P 500, right? Or PE ratio, price to earnings. And multiples mirror levels seen prior to the dot-com bubble crash. So now they're looking at the S&P and saying, golly, all this growth. Where did we see this before? Where did we see this kind of growth? And then what happened after that growth stopped? That's what they're starting to say. So they saw this kind of growth during the dot-com bubble, and then all of a sudden, boom, S&P falls off the cliff. So let's keep reading though. Let's keep reading here. Every single indicator seems to tell us we're in a historic bubble, Dietrich said. It's hard to look at that and say that we're not going to see a major correction coming. Now is not the time to be putting new money in the market, he warned. So he's telling people, see, this is what I try to tell y'all guys, this mainstream media and all this propaganda, right? This ain't the time to be putting money in the market, according to him, right? Let's keep reading. The biggest indicator of a coming correction is smart money. Let's find out what smart money is. Smart money investors who are moving out of the stock market and into safer cash equivalents, Dietrich said. He pointed to recent stock sales from billionaires like Jeff Bezos, Warren Buffett, and the Walton family. See, here's what he's not telling you though. Only a small part of these people's wealth did they move out of the stock market. The Walton family still has billions and billions and billions and billions of dollars still in Walmart stock. See, talk to me when the Walton family sells all of their Walmart stock. Talk to me when Jeff Bezos sells all of his stock in Amazon. Not like 5% of it, 3% of it. No, talk to me when they move all of it. Then you got my attention. But this little stuff that Jeff Bezos did, he moved about 8 billion out. The guy's worth 100 billion, people. He's worth 100 billion. And most of that 100 billion, guess where it's at? Amazon stock. At some point, he got to take money out of Amazon stock. Why not take it out at all-time highs when you're already a billionaire? That's when billionaires take it out, when it's at all-time highs. Yes, billionaires move their money to cash when it's at all-time highs. Why? Because they've already made the money. They move it to cash until the next downturn or the next, you know what I'm saying? So I get what this guy is saying, but him quoting, oh, what do you think Jeff Bezos is moving it out? What do you think Warren Buffett is moving it out? What do you think the Walton family is moving it out? Because maybe they had such an incredible ride from 2020 to now when the stock market just went crazy last year, why wouldn't you take it out? Why wouldn't you take profits? You would. If you're already at wealth and you've already met your wealth goals, you're not in the building stage of wealth anymore. You're at wealth. You're saying, I had a great, fantastic 2023. I made 300 grand. I'm already at wealth, plus I made 300 grand. Why would I lose that? Why would I risk that going down again? I wouldn't. I just take it out. So he ain't telling me nothing that ain't common. He ain't telling me nothing that's not common. Okay. He pointed to recent stock sales of billionaires like Jeff Bezos, Warren Buffett, and the Walton family, the heirs of the Walmart empire, as a sign big investors sense the market is poised to correct. Well, if it's poised to correct, why didn't they sell all their Walmart stock? Somebody help me with that. These people are worth billions. I'm talking about billions. Like the Walmart kids, all of them worth like 10, 15, 20, 30 billion. All of them. And guess what? Most of that billions are still in Walmart stock. So let me know when they sell it all. Then I'll, oh, golly, there may be a problem a brewing. Let me know when Jeff Bezos goes to zero in Amazon stock, when he sells it all, right? Warren Buffett, the guy has been a billionaire for, what, 100 years? I know I'm being facetious, but he's been a billionaire a long time. The guy comes from money. It ain't unusual for Warren Buffett to move big positions into cash when he's already made billions. It's not unusual for him to do that. It's not unusual for billionaire and big hedge funds and Wall Street firms to do that, guys, but you and I aren't that. We are people who are out here struggling to pay our credit card bill. We people out here living paycheck to paycheck. What we gonna move out the market? We ain't got nothing to move out the market. We're trying to create. I hope it do crash. Because guess what? A guy like me, when it does crash, just like it did in 22, made a bunch of money. Why? Because I just went in and gobbled them up, dirt cheap, and held on to them. That's all I did. Nothing, oh no, I didn't have some program. I didn't buy some course. I didn't have some genius investment advisor. No, it's pretty damn simple. It's pretty simple. It's pretty simple. If you have great companies that have a historical track record of performance and they go down in value, it's pretty simple. You buy them and then you just hold them till they go back up in value. Pretty simple. Pretty simple. You buy the S&P 500 when it's undervalued and you just hold it till it goes back to being valued, maybe even overvalued. I don't care. That's his opinion. My opinion is, if you're in the building stage of wealth, you better be buying assets. Now, if the S&P that's trading at 5,200 points, let's say it did slide back down to 4,500 points or 4,200 points. Guess what? It's already made the precedent. It's already got the 52. So history tells me it'll get back there again at some point. That's what it does. 10 years ago, the S&P 500 was trading at 2,000 points. 10 years later, it's trading at 5,200 points. 3,200 points in 10 years, guys. I don't care what this guy's saying. He's already rich. He's already wealthy. He's already worth multiple of millions of dollars. So if he want to move his multiple million dollars to cash, go ahead. I ain't got no cash to move to cash. I'm trying to create some cash. So guess what I'm going to be doing? I hope it go down so I can buy all my great companies at a discount. And then I'm just going to hold them for 10 years. That's all you got to do. See, most of us don't have wealth. Most of us are in the building stage of wealth. We don't get to move our cash and put it on the sideline when it's very little cash. Oh, I got $1,000 in the S&P 500. And they telling me it's going to crash. I'm going to move my $1,000. $1,000 ain't gonna buy you nothing. It's not gonna generate any passive income, none. So move it if that's what you want to do. But you're missing the forest for the trees. What you should be doing is taking $1,000 every month and putting it in something that will multiply it over time through dollar cost averaging. That's what we should be doing. Not listening to these guys. These guys are talking about people with billions and billions of dollars, millions and millions of dollars. And guess who he quote? He quote 3 of the richest people in America. Oh yeah, these 3 richest people in America are moving their money out of the stock market, but he don't tell you they moving all out. They just moving a little bit out. So he don't tell you that. He just say, oh, that's Jeff Bezos is moving. He's moving all. That's a sign that something's wrong. No, it's not. Why the rest of his money still in Amazon stock if you think it's a sign of something going wrong? Just hear me out here, guys. This kind of stuff right here is fine. It's his opinion. But come on, man. While sales by insiders or big shareholders are often scheduled in advance, which they are, they can also be a sign that investors are concerned that the market is approaching a peak. Again, guys, when you're a big hedge fund, you're an institutional investor, you're a billionaire investor, you're always in the market. You're always looking for buy low, sell high. See, these guys are not these big old gigantic long-term trying to build wealth. They are people that already have wealth and they get in the market, they get out. They get in, they get out. They keep building and stacking paper. They keep stacking their wealth. They're already wealthy. When you're not wealthy, you stay in the market 365 until you get to your wealth. It goes in cycles. I don't care if the market falls by 10% or 20%. That's good news for me because I got 10 years before I need my wealth. And I'm going, everything go on sale 20%. You think I'm not going to go buy much as I can buy? Remember things went on sale the last time it went on sale in 2022, guys? What happened in 2022 when it went on sale? They said the same thing. What happened? What happened the very next year? The last time it went on sale. What happened? For all these experts. What happened in 22 when everything went on sale? What happened in 23? What happened in the last 10 weeks of 2023? One of the greatest runs in the history of the stock market is what happened. So if you'd have been buying all of 22 at dirt cheap prices and just held the dang on thing, you'd have made out like a bandit. See, they don't tell you that, do you? You don't tell you that. He want to quote some billionaire. I don't care what Jeff Bezos do. You know when I care what Jeff Bezos do? When he sell every share of Amazon stock and go to cash. Then I will listen to what Jeff Bezos has to say. Till then, I don't care what he does. I don't care what the Walton family does until they sell every single last stock of Walmart. Then I'll listen. I won't listen until Warren Buffett sells every last share of Berkshire Hathaway. How about that? Sell it all. Go to all cash. Then I'll listen. But see, ain't none of them done that. Ain't none of them done that. This guy. There's just no ambiguity here. It is bizarrely overpriced, Dietrich said of the stock market. You're seeing the smart money right now moving massive amounts into cash. But yet and still, they're moving massive amounts into cash, but the stock market, the S&P, is at all times high. So how can they be massively moving money out of the stock market when you still got the S&P hitting all-time highs every day? When is that going to happen? See, that's what I don't get. Because if they were massively moving it out like he's saying, guess what would be happening? Stock price would be going down. S&P would be going down. Dow would be going down. Because where they're massively moving money out of what? Companies. The stock market is just companies, guys. If they're moving money out of companies, then guess what happens? The market goes down. That's not happening yet. Now, he says it's coming. Maybe it will, maybe it won't. I don't care. I'm going to keep buying. Because I told you I want it to go down 10, 15, 20%. Great. Give me another 2022 this year or next year. I'm okay with that. Because like I said, I got a 10-year window. I got a 10-year window, and I believe the S&P 500 is going to be 8 to 10,000 points. 8 to 10,000 points in 10 years. That's what I think. So that's the game I'm playing. I'm not playing this little short stuff like billionaires play. I'm not a billionaire. I'm not a billionaire. I can't play the same financial game they play. They can do that because they're billionaires. I don't know. If you ain't a billionaire, if you ain't a multimillionaire, why would you try to play their game? You're trying to get to wealth. You better stay in this, I'm going to be in the market 365 days a year game. Now, once you get to your wealth, then you can play the game billionaires play. Oh, I got my 2 million, Richard. I'm out of here. Perfect. But until you get to that pot of gold at the end of the rainbow, you can't do what the billionaires do. Just understand that. You don't have the same information the billionaires have. They're privy to information you and I don't get ever. We ain't gonna get it. So you can't play the game they're playing. They're billionaires. They got unlimited resources. You got a cell phone. That's your resource. I got a cell phone. This is my resource. So I can't play the same game the billionaires play. They got, come on, man. Y'all know this, but let's keep reading. Let's see what this guy has to do, and we'll finish this up, right? Let's finish what he has to say. They know it's completely overvalued, and if they sell now, they can buy it back cheaper later. No duh. Oh my God. Is this guy really a chief economist somewhere? They know if they get out now, they can wait and they can buy it later cheaper. Yeah, sure they can, but they're already rich. Sure, that's what they did in 2022. Yeah, see, they're already rich. So in 2022, they take their riches, they put it in the market, and they wait. Okay, 2023 rolls around, everything goes bananas. Guess what they do at the beginning of 2024? Taking profits off the table. That's when Jeff Bezos sold. That's when Zuckerberg sold. That's when the JP Morgan Chase CEO sold. That's when the Walton family sold. But you got to understand, guys, they were already invested. They just took profits. That's all they did. They didn't divest all of their portfolio. Like this guy would want you to think, oh, they just divested everything. They went strictly to cash. That's not true, guys. None of those people have went strictly to cash. All of them still have money inside of companies in the form of stock and shares. All of them do. All of them he mentioned do. It's unclear what could trigger a coming stock correction. It's unclear though. I don't know what's going to cause the correction. That's unclear. Dietrich said, noting that prior crashes like the one that preceded the 2008 crisis were sparked by unpredictable black swan events, a spike in oil prices as a result of geopolitical conflict, or more regional banking problems stemming from the commercial real estate sector could set the downfall for stocks in motion, he speculated. But let me tell you exactly what's going to happen, guys. This is what's going to happen. Even if any of that happened, we still have an ace up our sleeve. And guess what that ace up our sleeve is? Can somebody tell me the ace up our sleeve that can unravel all of that if that were to happen? What's the ace up our sleeve? What is he not talking about right here? What is he leaving out? What's the ace up our sleeve? If any of this stuff happens, this black swan event, what is the ace up our sleeve that we have? We haven't even played that ace yet. We haven't even played that ace yet. We're holding it back. No one knows we have it. Well, everybody knows we have it, but there you go. I knew somebody in the chat would hit the nail right on the head. The ace we got up our sleeves, guys, is interest rates are going to come down at some point. See, he ain't talking about that. That's going to counteract the black swan event. If we did get a black swan event and things started to crashing a little bit and the economy started going wobbly a little bit, guess what the Fed going to do? They're going to slide in and reduce interest rates by 150 basis points. Guess what that's going to do? Kickstart things back again. So we got an ace up our sleeve that this guy, he's just talking about rich people. He ain't talking about you and me. This message, what he's talking about, are not for people like you and I who are building wealth. It's for people who already got wealth. He's telling people who already got wealth, guys, you've made your profit. It's probably time to get out just in case. Take your profits. You've done well. He's not talking to people who are trying to build wealth, because people who are trying to build wealth know it ain't a bad thing if the thing corrects itself by 15, 20%. Not really. For me, it's not. It's a great thing, because I know in a year or two, it's going to be right back at all-time highs again. Look at the history of it. 2008, oh, it'll never, no, let me even go back farther than that. 1929, Great Depression. It'll never come back. It'll never be the same. Came back and it was better, right? Think about the 80s, 70s, late 70s, 80s, when inflation was crazy. Interest rates were crazy, 20-something% interest rates. It'll never come back. It'll never be the same. Guess what? Came back even better. Let's go to the .com, 99, .com bubble. Oh, golly, it'll never be the same. It'll never come back. Guess what? Came back better and stronger. Oh, let's go to 2008, great financial crisis. That's it, guys. We've never seen anything like this in the history of the world. We'll never recover. Real estate will never be the same. Real estate will never be the same. Stocks will never be the same. We'll never recover from this. This day will go down in history as the worst day ever. It'll never recover. Guess what? Recovered, surpassed it, went to the moon. 2020, great pandemic breaks out. Oh my goodness, that's it, guys. End of the world. It'll never come back. Never come back. That's it. We'll never see anything like it again. We'll never recover. 60 days later, we recovered. All-time highs in the stock market. 2022. Oh my God. Oh, that's it. That's it. That's it. I told y'all, it don't catch up to us. It'll catch up to us. We'll never recover. We'll never recover from 2022. Guess what? Last 10 weeks in 2023, not only did it recover, it took 3 trips to the moon and back. 3 trips to the moon and back. Yeah. See, we got a history littered of these guys talking about something ain't gonna never recover. It'll be a disaster for the rest of the world. It'll never, blah, 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 blah. We got a history of these guys. And guess what? It's mainstream media, propaganda, getting you guys to stay on the sideline, be afraid, be scared, don't build wealth, stay in the matrix, let us control your mind, let us tell you what to buy, let us tell you when to retire, let us control everything. Did you see the article? And we're gonna cover that tomorrow. But did you see the article where they're trying to push Social Security back to 69 years old? So y'all don't be, I'm trying to tell y'all what's going on around here. These people are trying to push Social Security back to 69 years old. That's the proposal. Yes, it is. We'll cover it tomorrow in more detail, but yes, sirski. Yes, sirski. So from 18 to 70, they want you working. 18 to 70. Is that a fair trade-off? You go from 18, what's that, 52 years? 52 years, they want you out there grinding and bumping and grinding. Y'all remember that old song, Bumping and Grinding? Who was that? Was that Keith Sweat? Bumping and Grinding? I don't know which R&B singer, that old Bumping and Grinding song. That's what they want you doing for 52 years. Bumping and grinding for 52 years, guys. So listen, man, the stock market has a history of ebbs and flows. It goes up and it goes down. But history tells us, if I'm patient, if I'm disciplined, if I'm consistent in buying big boy blue chip assets, I can get to the pot of gold at the end of the rainbow. Yeah, R. Kelly. Now I know some of y'all don't like R. Kelly, and I ain't got nothing to do with that. But it's music. The Bumping and Grinding song, that was a good one. That's what they want you to do from a financial standpoint. Just bump and grind for 52 years. And then they give you Social Security, a couple $1,000s a month. If that's a fair trade-off to you guys, hang in there. Good luck to you. It wasn't a fair trade-off for me. I said, no, I can't give you 50 years. I can't give you 52 years. What I can give you is till I'm 50. That's it for me. I'm going to build my wealth, and by the time I get to 50 years old, sayonara, arrivederci, hasta luegos, see ya. That was it for me. Now for you, you may want to go ahead and work till you're 69 until you get Social Security. I didn't want that. So my only way of getting to my pot of gold at the end of the rainbow is I had to invest in assets. Real estate for income, stock market through paper assets, and businesses. Those are the big 3. That's what I had to invest in for 2 decades. And guess what? All this crap about the stock market gonna never come back. That's all propaganda, man. Stock market comes back, man. Let me know when Warren Buffett sell every share of Berkshire Hathaway. Let me know when Jeff Bezos sell every share of Amazon. Let me know when what's his name? Elon Musk sell every share of Tesla. Let me know when the Walton family sells every share of Walmart stock. Let me know when all the big boy billionaire investors divest all of their shares. Then come talk to me. Other than that, I don't want to hear this stuff about no crash and all this other crap, because it's crap. Last thing we're going to cover, guys, and we're going to get out of here, is a little bit of crypto news. Remember I told you these Bitcoin whales, these crypto whales, they're metamorphosizing. They used to be one thing, but now they're starting to evolve into something else. Here's the headline: new Bitcoin whales emerge in the corporate world. So now you're going from these obscure, hiding in the shadows, nobody knows who they are. Only thing you see is their little wallet number. You don't know who these Bitcoin whales are. They're hiding. You can't see me. I don't want you to see me. I don't want no publicity. Now all of a sudden you're shifting over to these big old corporate whales. Everybody can see them. You got the corporate whales now, right? While Tesla is the most familiar name across the world's largest corporate buyers, several companies have amassed far more Bitcoin, leading their share prices to skyrocket in value last year. Who you think behind this whole pump and dump now? Who been buying secretly, like I told y'all like 3 weeks ago, who was buying all this Bitcoin secretly? Now they come out and tell you the truth. It's been corporate whales. At the same time, the vast majority are found in North America. United States, basically, right? North America, United States. With the exception of Nexon, a Japanese-based video game publisher. This graphic via Visual Capitalist Media LU shows the public companies that own the most Bitcoin based on data from CoinGecko. So here it is right here. Jeez, these guys got some Bitcoin. So Galaxy has about 17,518 Bitcoin, which is worth about 912 million. Check this one out though. MicroStrategy owns 174,530 Bitcoin. Its estimated value, 9 billion. Woo, that's a whale right there, boy. That's the world's largest corporate holders of Bitcoin. The world's largest corporate whales. Marathon, 13,716 Bitcoin, worth over 700 million. Tesla, over 10,500 Bitcoin, over 547 million. Coinbase owns almost 9,200 Bitcoin, worth dang on near $500 million. That is amazing, guys. Those are some of your corporate whales. MicroStrategy at the top, $9.1 billion worth of crypto. That's a corporate whale. Headquartered in Virginia, the intelligence software firm first began buying Bitcoin in 2020. Now, these people start buying Bitcoin in 2020, guys, and they got over 9 billion worth. 4 years ago, they started buying Bitcoin. Now they got over 9 billion. Who you think, and probably over the last 6 months, that's probably triple. The value is triple, because you remember now, if they've been buying since 2020, okay, maybe they did buy a little bit during 21, which was high. But then in 22, 23, they bought real low. Now, they're reaping the rewards. It says right here, 2020 has grown its holdings to become roughly 10 times larger than the next highest corporate owner. MicroStrategy shares soared 350% in 2023 thanks to its scale of Bitcoin holdings. That's amazing to me, man. That's amazing to me. Tesla, like I said, has over $500 million. Those are your new Bitcoin whales, guys. These corporate guys, these corporate companies, they didn't even have BlackRock in there. They didn't have Grayscale in there. You know they gonna come in though, because they buying like crazy, right? They're gonna dump this thing here in a minute. When they dump it and it goes back down to $20,000 a coin, $18,000 a coin, which it will, that's when you're gonna see Grayscale, BlackRock, all those guys are gonna come in then. See, honestly, BlackRock and Grayscale don't care what they pay for it. Why? Because they got y'all coming in and buying their little spot ETFs. So they don't care what they pay. They'll pay 60, 70,000 a coin. They don't care. Why? Because y'all coming in there buying the ETFs. See, for them, gravy. It ain't, perfect. But I am under the belief BlackRock, Grayscale already had a ton of crypto that they've been buying. And once they got approval for this spot ETF, then all of a sudden they show up and they have $3.5 trillion worth of inflow into their ETFs, their spot ETFs. Really, they're spot ETPs, but they try to call them ETFs so they can fool you, right? They want you to think it's an ETF, but it ain't really an ETF, guys. Go do the homework. Go do the homework. Go do the homework. It's not really an ETF, but that's what they call it in mainstream media so that you can recognize ETF. See, you recognize ETF. You don't recognize ETP. You see something that says ETP, you be like, I don't know what that is. I ain't putting my money in that. But if you see ETF, oh yeah, I got an S&P 500 ETF. I know what an ETF is. Oh, that's okay. Let me put my money in this. That's what they bet on. And that's what people have been doing. People don't have no clue how this thing works. They don't have no clue how these spot ETFs work for Bitcoin. No clue. Guess what it is? It's all FOMO. It's all FOMO. It's all fear of missing out. My co-worker in the cubicle next to me said he made a bunch of money in crypto and I should get in, and I don't have a clue what's going on, but I'm getting in. I know I done heard of BlackRock, I done heard of Grayscale, I done heard of ARK. Let me get in. Don't have a clue of the history of the pump and dumps and the millions of people that done lost money. No clue. No clue. No clue that this thing has no underlying value. No clue. Other than what the next guy will pay for it. That's it. People don't even know that though. So there you go. You got your corporate guys, MicroStrategy, 9.1 billion. I don't know what their plan is, but that's a lot of money. That's a lot of money, man. That's a lot of money. You hear me? Goodness gracious. But there you go, guys. We covered the US dollar and some of the trouble that's brewing around the globe. We got all we got BRICS Nation and all these other little nations banding together, trying to create their own little currency and their own little payment system to try to not use the dollar anymore. And I told y'all what we can do to help combat that. Let's double down on the dollar. Let's double down on assets. As long as we double down on the dollar, double down on assets, reduce our debt, we're good. They can't touch us. But we got to reduce our debt and we got to double down on assets. I know you can't do anything about the nation's debt other than reduce your own personal debt. That's how you help. You help by reducing your own personal debt, getting your own house in order. Getting your own house in order. That's all you got to do. Get your own financial house in order. That's how you help reduce the national debt. This national debt is because of all of us. Right? It ain't a few people that created it. America created it. If you live in America, you're America. If you live here, you created it. So do your part to help reduce it. If we can do that and double down on assets here in the United States, they can't touch us. Can't touch us. Can't touch us. But we got to do those two things. That's what we can do. See, I already told you guys, control what you can control. Stop trying to control things you can't control. Control what you can control. What you can control is doing what? Getting your own personal debt cleaned up, no consumer debt, right? And then doubling down on assets. That's what you can do. We also talked about Biden and his old deal with trying to help the housing market. I think it's a great campaign proposal. I think it's a great campaign proposal. But as far as all that stuff getting proved, nah, it ain't gonna happen. It ain't gonna happen. But great campaign proposal. Let's see how he defends it during his debates, which will be coming soon. Probably he and the former president will be going after each other. So we'll see. We'll see if that pans out. I think it's admirable that he wants to do something for affordable housing because we certainly need it. But there's a lot of obstacles in his way. All I can tell you, because we have a free market. We have a free market financial system here. It's free market. So it's hard for people to give up profit to help others. You know, we don't want to help nobody else in this country. Not when it comes to money, especially not the 1%. They ain't gonna help you at all. They don't give you nothing. Oh yeah, we're gonna donate these 350 million acres so you can book. Nope, they're not gonna give you nothing. So you ain't gonna look for nothing from the 1%, right? They're not gonna give it to you. That's not how our system is set up. It's not set up for people to just give you stuff. It's just not set up for that. So hopefully some of that happens. We'll see. Then we talked about the stock market being overpriced, specifically the S&P 500, because I believe that represents the broader stock market. And I told y'all how I feel about that. Yeah, I don't care what these rich guys doing. They're already rich. I don't need you talking about no rich people. They're already rich. Talk to me about people that's trying to build wealth. How can they take advantage of a good stock market, down stock market? How can normal, everyday 99%ers take advantage? That's what I want to see. You do an article on that. Stop worrying about what Jeff Bezos doing. The dude, a billionaire. So whatever. My goal is I'm going to invest every single day the market's open. I did some investing this morning. Bought some more SPLG. I told y'all, Monday through, put it this way, every day the market's open, I'm buying SPLG and I'm buying FTEC. I'm buying $100 to $300 worth every single day the market's open. For 10 years. 10 years. See, here's the way I look at it. If I can get an average of $200 per day in the market, in SPLG and FTEC, at least average 200 a day, right? I do that for 200 days that the market is open. That's $40,000 a year, right? Let me show you this math on this and then we'll get y'all out of here. Let me show you the math on this because I want y'all to understand the power of this thing. Let me show y'all the math on this thing. $40,000 a year. Let's do the math on this thing real quick and then I'm gonna get y'all out of here. Because this is what I'm doing. Y'all, a lot of y'all asking me, Richard, what are you doing? What are you investing in? What do you do? I'm telling you right now what I'm doing. I told y'all guys, I'm a simple guy. I'm a simple guy. It ain't sophisticated. It's pretty simple. It is not sophisticated on my end. I'm doing $100 to $300 a day. I'm gonna do that for the next 10 years. This is one of the investment strategies. I got more than this now. I got like 3 of them. But this is one of my investment strategies that I think we all can do, right? You pick your dollar amount. I'm just picking my dollar amount. My dollar amount is $100 to $300 a day. So I do that for 10 years and I get an 8% rate of return on my $40,000. Where do you get the $40,000 from, Richard? Well, $200 a day times 200 is $40,000, right? I wasn't very good in math, but I got a calculator here, so I worked it out. So 40,000 per year, 40,000 a year. How do I get there? $200 a day, every day the market's open. That's $40,000 a year. I'm gonna do that over the next 10 years at an 8% rate of return. I'm gonna have almost $600,000, guys. I'm gonna have almost $600,000 in just that one strategy. That ain't even the main strategy. That's one strategy. That's taking $100 to $300 a day with an average of $200 a day, guys. Just putting in the SPLG and FTEC. That's at an 8% rate of return. Now, what if the S&P 500 and FTEC do what it's done over the last 10 years? So the last 10 years, the S&P 500 has done around a 12% rate of return. Information technology, FTEC, has done over a 20% rate of return. I'm not gonna even take the 20%. Let's just say we do 10% combined between the S&P and FTEC. I do 10% over the next 10 years. I get a 10% average over the next 10 years. What does that do to my return? I'm already at about 600K at an 8% return. What if I get a 10% return? Oh, you'll never get that. Well, it's already done it, guys. It's already done it. Go look at your history. It's already done it. So don't tell me what it won't do. It's done it already. That's 640,000. So I go from 580 at an 8% return to 640 at a 10% return. Let's say I do exactly what the S&P done over the last 10 years, which is about a 12% rate of return. I just do exactly that. I'm at $705,000, guys. $705,000, right? That's where I'm at. I'm not even gonna throw in what FTEC did. FTEC over the last 10 years has done 20% rate of return. 20%, last 10 years. 100 to 300 a day, every day the market's open with an average of 200. I'm gonna get somewhere between 580,000, 705,000 just on that one strategy. Then I got another strategy where I'm doing dollar cost averaging in every single month. So I got the monthly strategy, I got the daily strategy, where I'm just buying. Not huge dollars, just consistently in the market over a 10-year period. That's where the wealth is built. See, a lot of people miss that. See, they think they gotta have, let me put in $50,000 for 2 weeks. That ain't where the wealth is built. The wealth is built taking 100, 200, 300, 400, 500, 1,000, $1,500, $2,000 a month, sticking that thing in an S&P for 10 years, 15 years, and letting it compound. That's where the money's at for most of us. That's where we're gonna get our pot of gold at the end of the rainbow, right there. So think about that. That's my strategy, or at least one of my strategies. If you don't know what SPLG is or FTEC, go out to the $1 Trillion Research Lab, punch it in the search button, and it'll give it to you. Or go down in the description box, open up a Moomoo account. So Moomoo is my brokerage app that I'm using, primary brokerage app. The link's down below in the description box. If you want up to 15 free stocks, and you're gonna be using the same brokerage app that I use, go down to that description box. When you put $100 in your brokerage account, you get 5 free stocks. Now, you take that $100 and do exactly what I just did. Take that $100 and do exactly what I just did. Let's just say you took the $100, you do $100 a week. You do $100 a week. I'm sorry, you do $100 a day. Do $100 a day for 200 days. What is that? That's $20,000, right? At 8%. Check this out, $100 a day, every day the market is open, 200 days. Market is open 200 days. That's $20,000. You do that every single year for the next 10 years. You got $300,000 in your little pot of gold at the end of the rainbow fund. $100 a day, every day the market is open. Buying SPLG only. Not FTEC, but just SPLG. Just buying SPLG, $100 a day, 200 days a year, every day the market's open. You do that for 10 years, get an 8% return. How do I know I'm gonna get that? You don't know, but you do know history says it's already done it many times. It's done it over the last 90 years. So I'll take that 90-year history and project that out another 10 years, and I'll believe I'll get similar results or better. That's the way I look at it. So you do that, you got your $300,000 in your pot of gold at the end of the rainbow fund. That's life-changing money, guys. I'm not sure who on this planet won't take 300K and do something special with it, especially if you're in the 99%. Because guess what? Most of y'all ain't got 300K right now. So it's a lot of money. If you can discipline yourself, be consistent, and be patient, there's the blueprint. So go down to the Moomoo link in the description box, open up the Moomoo account, put your $100 in it, get your 5 free stocks, put your $1,000 in it, get yourself 15 free stocks. Think about this. Check this one out now. Last one, and I promise you I'm out of here. Last one. let's say you did the $1,000 a month, not a day, not a week, but $1,000 a month at a 10% rate of return. $1,000 a month, 10% rate of return. $12,000 a year for the next 10 years. A couple $1,000 in your pot of gold at the end of the rainbow fund. There you go. Now you got a couple $100,000 because you disciplined yourself, remained consistent, remained patient. You put $1,000 a month, SPLG, S&P 500, historical track record of multiplying money. You do that for 10 years. Just work hard, keep what you earn, and then invest what you keep into this. Now you got $200,000 in your pot of gold at the end of the rainbow fund. I don't know, guys. That, to me, I take it. So get down to the description box, open up that Moo account, put some money in it. 100 up to 1,000, get yourself up to 15 free stocks. And then you're going to send me an email and say, Richard, I opened my Moo. I'm ready to rock with you. I'm ready to rock with you. Send me that wealth transfer blueprint video that outlines the 3 big boy blue chip paper assets you're buying, which includes the Magnificent 7. And send me that Moo tutorial video. Send me that Moo tutorial video because I want to collapse time frames. I ain't got time to be sitting up here trying to find stuff on this app. I want to know exactly what I need to do to start building wealth. That's what that video gives you that I did. That tutorial video, it gets straight to the nitty gritty. Ain't no, oh, let's go over here and look at global markets. Nope. We're going to get straight to the nitty gritty. This is how you buy SPLG. This is how you buy FTEC. Boom, straight to the nitty gritty. Then I go show you some help center areas in the learning tabs because that's all you really need. All the rest of that crap, listen, I don't use it. All I use is how do I make my trade? How do I get help if I get stuck? And if I want some tutorials to learn stuff, where do I find those at? And where I find my free stocks. And where do I find the free stocks? That's what I cover in that video. So if you want those two and you want to rock with me, copy my plan. You don't have to. I'm not your financial advisor. I don't guarantee nothing. I'm not a licensed financial advisor. I'm not a CFP. I'm not a CPA. I'm not any of that stuff. Only thing I am is a guy who's done this for 25 years on his own. And I've done okay. I've done okay. Why? Because I've learned the fundamental things about buying assets. You buy the best assets out there and you hold them. That's all you got to do. That's how you build wealth. You buy the very best assets out there and hold them for dear life. 5, 10, 15, 20 years. If they're blue chip big boys, you're gonna be okay. That's the key to success in investing, guys. Buy big boy blue chip and hold them. Hold them for dear life. Take every dime you make, instead of making the 1% rich, make yourself rich by putting them in assets and waiting. That's all you got to do. That's it. Well, guys, appreciate you. Lock it in with a thumbs up. I'm well over my time limit. I think I'm almost approaching 100 minutes on this thing, so I'm well over the time limit. Lock it in with a thumbs up before you get out of here if you appreciate the content, because y'all know I appreciate y'all. I appreciate you rocking with me. I know some of y'all done complained about, oh, golly, you got an echo in your house. I mean, golly, the echo is just, listen, man, if that's all you concentrating on, you in the wrong YouTube channel. Stop worrying about the echo, man, and get the message. If the echo is distracting you, I don't know what to tell you. I don't know what to tell you. Don't distract me, and I'm here. I hear it. It don't bother me. I don't lose my train of thought. I'm still doing what I'm delivering, the information I got to deliver. So I can't, could I go out and buy some fancy mic and spend $100, $200, $300, $400, $500 on a mic? Sure. But why would I do that? I'd rather take that $500 and buy SPLG and get paid and stack the cash. Because see, if you really are here to learn, guys, you're not going to let anything stop you from learning. Why would a little echo? See, that's the problem with us. We want everything perfect. We want it all perfect. And then when we get it perfect, we do nothing with the information. Even if I went out and bought a mic, it'll be something else. Richard, I don't like that blue shirt, man. That's distracting. Could you please stop wearing blue shirts? It's distracting. Richard, could you, that cup of coffee, do you have to drink coffee when you're doing the live streams, Richard? Could you just stop doing the live streams with the coffee? Can you just do your coffee before the live streams? It's distracting. Can you stop reading from the phone? Can you just memorize it all? Can you please just memorize all of that so that I don't have to worry about you looking down from the screen? You're just looking down from the screen. You back up the screen. You're looking down from the screen. Can you please stop that? Can you please shave before you get on the live stream, Richard? I mean, it's distracting to see you unshaved. It's not professional. It's not very professional that you're not shaved. See what I'm saying? When does it stop? You do one thing, there's another one, there's another one, there's another one. I ain't gonna do any of that stuff. I'm just gonna show up every day and I'm gonna give you all this financial information. If you want it, be here tomorrow at 10:30 a.m. Eastern time. Every day, 7 days a week. That's what I'm giving you. If you want additional information, stay tuned to the channel. I drop edited content every afternoon. Every day edited content, every day live stream. And on Sundays, we'll be doing Q&A live streams. So if you got questions, tap in on Sunday morning at 10:30 a.m. We'll have a live stream where your boy will be answering questions every Sunday. If you want to rock with that, rock with it. If you got a problem with my attire, the way I look, my clothes, the echo in my house, that's your problem. I ain't got no problem with any of that. That's why I don't fix any of it. See, people got to understand, I don't fix any of it because I don't have a problem with it. I can't control what you think. Only thing I can control is what I think. And that's what I stick with. That's why I try to tell you guys. Control what you can control. You think when I'm watching somebody on YouTube, I'm worried and I'm trying to get some edification. I'm trying to get some learningfication. I'm trying to get something to multiply money. You think I'm worried about if they got an echo? You think I'm worried about what kind of shirt they're wearing? If they shaved or unshaved? No, I don't. Only thing I worry about is that message. That one nugget I'm looking for. I'm looking for one nugget to transform my life. That's all I'm focused on. I don't care what they look like. I could care less. I could care less. But some of us, we so fascinated with us and what we want, we don't even care about what somebody else wants. Nobody cares if this is just the way I like to do it. So I'm gonna continue to do it that way. If you rock with me, lock it in with a thumbs up. All right, guys, I'm gonna get on out of here. Appreciate y'all. I'll see y'all tomorrow. Don't forget, guys, check out my other content that I'm dropping in the afternoons. That's shorter content, straight to the point, no type of live stream thing, but stick around for that. This video here, will go to, the live stream will go to a video. After I end it, it'll go to a video as well. So go back and look at this if you need to. If not, I'll see you tomorrow. Appreciate you. Thoughts become things. You can see it in your mind. You can hold it in your hands. You guys keep chasing your greatness. Never stop believing in yourself. Stay healthy. Get wealthy. And we'll catch y'all tomorrow. Peace.